Good morning, everyone. And today is Tuesday, December 8th. And I want to talk about Tesla and how to trade Tesla. I am very active in on Facebook groups and seeing people's reaction, and that's how I plan on doing a lot of videos, trying to respond to a lot of the common questions I see in those groups. And so, uh, a lot of people are saying, "Hey, should I sell Tesla? Should I buy more Tesla?" Tesla is taking a bit of a hit this morning. But I just want to go over the chart, a little technical analysis on Tesla and how you should be trading Tesla. Because there are a lot of people losing money on Tesla. How do you lose money on a stock that's jumping $20 at a time? Easy, actually, because remember, the house is against you. There's a lot of money being made on the stock market, but it's designed for the house to win. And so long as you understand the house's design, you will win. And if you attack the stock market with commonality and you're thinking like, okay, let me just buy a call option because people are making so much money on call options, and when it goes up $20, I'm gonna, my $1,000 is going to turn to 10 grand. No, if it was that easy, we'd all be millionaires. And it would be no need for stock market videos. So we're just like, hey, buy Tesla, let's move it. So anyway, let's get into it. Again, this is a disclaimer: when trading and watching videos and you're watching someone else's strategy, you don't blindly follow anyone because the market changes with a news report, with buyers and sellers controls the stock market. So somebody, it could be a trade off, it could be a sell off going on, and doesn't necessarily mean you should sell. But meter your reactions. Don't get emotional about it. Use logic. And at the end of the day, all we're doing is hypothesizing on uh, what the direction of the market is going and how to play it for our money. So don't blindly follow anybody, but have your own filter system for information and apply it to your own personal trading system, your trading budget, your trading goals, and your strategy. With that being said, let's roll. So Tesla, this is the daily chart for Tesla. This is yesterday's chart. It went from a low of $600 to a high of $147. Now, if you see these lines I drew, I'm gonna blow out a little bit. So I'm gonna show you guys how to trade my strategy on trading Tesla, and also, if you don't go use my strategy, you're gonna learn something above basic trading. So I got these trend lines, right? This trend line started in February, a high in February, touched September's high, and now if you look at it, consistent trend line. This trend line was here before yesterday, and it's trend lines don't lie, man. I mean, the results show. So what happened yesterday? The stock hit the trend line, broke through a little bit, had a false breakout, and came back down, right? And so now what we're seeing in the market is a bounce from bouncing off that trend line. So what happens is these stocks bounce from these trend lines. If you look here, this trend line I drew, this trend line from the stock on November 30th, it hit this trend line and bounced. Came up. Now, I won't hit it exactly, but came up, bounced, hit this trend line, and gain momentum to break through. So that's what these stocks will do. They'll hit trend lines, bounce down, and then come back with a vengeance and break through, right? Because the stock market favors upside, right? I mean, it's not gonna go up in a straight line, but it favors the upside. We're naturally in the United States is naturally a bull market. So, with that being said, today the candlestick for today isn't in yet, but it's going to be in this space here. And right now, as of this chart, Tesla is trading at 629. So, based off the trend lines, my hypothesis for today will be a low of, I believe, won't get lower than this trend line here, which is 612. So, it should go no lower than 612 and no higher than 646. I could be wrong. I would love to be wrong. I would love for it to bust through and go through the stratosphere. Um, And so traditionally, what will happen is if it doesn't go down, right, it'll go up and actually sit on the trend line. If it breaks through, it'll sit on this trend line. Kind of like what happened here. Like it kind of bounced down, way down for a few days, and it sat on the trend line. So it may sit on this trend line of 648 before it goes up even more. So anyway, how to play Tesla, right? So most people, traditional way of trading, buy the stock, right? So my advice is really for people with small accounts, because if you got 400 grand in the bank, actually, if you got 600,000, well, $70,000 or more, if you don't want to trade your whole account in the bank, yeah, selling covered, selling covered puts, selling puts options would be the greatest way to play this. I wouldn't even buy the shares, but that's a whole nother strategy. But if you have a small account, like if you're trading, a $20,000, a $10,000, a $5,000, a $1,500 account, and you want to trade Tesla, buying the stock, I mean, you can. Now that depends on your trading goals, your strategy, your goals, right? So if your goal is to, your trading account is just extra money, and you put that extra money into the stock market and you just let it sit there and you go on about your business, right? You don't even check your account every day, you just got sitting in there. Tesla will be a good way to go, right? I would more recommend in an ETF stock like SPY or QQQ, but this is the way to go. Then buy, you don't have time to be messing around and strategizing all that. Buy the stock and move on life. You know what I mean? That's a great way to go. But there are a lot of people who, name my channel Trading for Income. If you want income, then you've got to strategize, right? You got to put in some work. There is no just set it in there and wait for it to go up and buy low, sell high. That's easier, way easier said than done. The market is against you. You're fighting. You play. This is like football, man. You're strategizing. It ain't just running the football and throwing the football. No, you got to strategize against that defense. And the defense that's playing against us is the stock market. So this is how you should play it with debit spreads and credit spreads. And I'm not going to give you advice. I'm going to show you why. So let's say, so there are people losing money buying options, right? Because people buy options because they feel options will give you it's quick money, right? I mean, it makes sense, right? Because yesterday, like Tesla, if you'd have bought it right here at $600, and then let's say, uh, in your wisdom, you saw this trend line, you saw that 628, you made 28 bucks, right? But if you'd have bought an option, you'd get like 10, 20 times your money. So if you have questions on options, I recommend you do your homework on that. But so I'm gonna show you in using the website Options Profit Calculator. Great website. Um, It's good for giving you an idea. I wouldn't go dollar for dollar because some of the calculations are a little off. But it's in the ballpark, right? I mean, I'd be off by like maybe in the tens or the ones place as far as the dollar values. But it's the ballpark. And also, what I'm showing you now is pre-market. So this is based off of yesterday's numbers. So let's go. Actually, let's go to E-Trade. I'm trading with E-Trade, and this is Tesla's options chain, right? And so this is for December 11th. Let's go out to the 18th, right? And we're looking at in the money calls. And so let's hypothetically say you buy, man, this is a long chain. All right, I got it. I should have it on. I'm not the end yet. There we go. Jeez. Um, so as of yesterday, right? So let's say right now, let's say Tesla's at 650. Out the money. You're out the money call. Just out the money call at 650. This volume is important. This is what people are buying. So sometimes that will tell you, you know, that will give you an indication, but don't take it as the gospel because there's an old saying: all the dogs barking up the wrong tree doesn't make it the right tree, right? But it's an indicator, a confirmation if you're right. So anyway, let's say so right now there's high volume. The highest volume I see is at $700. So it's basically saying they're guessing that Tesla's going to go up to $700, which it will, but $700 usually is a resistance point for any stock. The whole dollar amount is a resistance point, so it's probably going to bounce down from seven. It might not even get that far because like with me, when I'm selling, I'm not going to sell at seven. I'm going to sell at 698, 695, or something like that beforehand. Um, so anyway, let's say you want to buy an option. So this it shows zero because it hasn't reset yet for today, but it shows the previous price of $20.25 per contract, right? Which 100 contracts, that's $2,000. Let's go to the option details. This is way out of the money. So and again, it depends on strategy. I don't recommend doing way out of the money, but I know it's attractive because people think it's cheap, right? Even though 2 grand for one option is not cheap, but just an example. We got great value. Look at 3 million, 3.5 million, a little more than that. So these are the options Greeks. Know your option Greeks if you're going to buy or even sell options. It shows very low volatility, which I don't know how accurate that is. This looks more accurate. It's very volatile right now. I think all this has to reset for today. So once the market actually opens, this will be completely different. But the things that will be similar will be your theta. Number one thing I look at is theta. So if you buy this option for $2,000, you're going to automatically lose $95 per day. Theta burn. So that's what happens when people hold options too long. And even though the market dips, it goes against you and then comes back into your favor and you still have a negative number, it's because of theta burn. And this is the problem. You're losing $95 a day. And then delta, your delta is how much the option makes per move. So if it moves by $1 or $5, depends on the chain, you're going to make $21 per dollar. So every dollar move it makes, you're going to make $21. So that requires, but you got to beat the theta. So just to beat the theta, your it's got to move by $5 to beat the theta for you to break even. This is rounding up. I'm not considering Vega and Gamma and all that stuff. This is just round numbers. This keeping it simple. So that's not usual with options because usually you want to get an option with like a dollar theta, loses $1 a day, and then a $50 delta, like you know what I mean, something like that. Those are favorable options, but those are usually lower volatile stocks. So this is moving again. This is the house way of controlling your profits, right? Because we all know Tesla is just gapping up. It's volatile. It's moving. And if this theta was, you know, $80, you'll make a killing, And I mean, not to say the delta was $80, you'll make a killing. So anyway, let's go to the example. So let's say we bought that $700 call, right? So this is Tesla. Let's say you bought one call at $2,000. This $700 strike price. So your cost is $2,000 plus whatever your broker fees is. So that's your maximum risk. You can lose 2 grand. You have unlimited upside. This is the chart on time. So according to today, and again, this is pre-market stuff. So these numbers aren't 100% uh, on point, but it's in the ballpark, and it gives you an idea, right? It's the overall idea. So instantly, like right. So if it's at, let's say this is calculating Tesla being at $642. So at 644, you're only up $38. But if it stays here throughout the day and doesn't move, that's how much the option contract is worth, right? If it gaps up in one day, you can make, this is net, right? So you see, that option contract is worth $4,700 minus your initial investment. You're making, I'm a rounder, I'm rounding off. You're making about $2,600, which sounds great, right? Yay! But the market don't work that way, man. Unless you are, I mean, if you're really, really good at technical analysis, you jump in and out, you can make these plays. Day traders make these plays. This is what day trading basically is, right? But if you're a swing trader or if you're not that experienced, stay away from single options because look at this. If let's say Tesla on 8, 9, 10, 11. Yeah, Friday's 11th. On Friday, gaps up by $20. It says at 664. Your $2,000 risk is only makes you 120 bucks. And let's say it goes down and then up, down. And so you see what I'm saying? See, red is bad. This is negative numbers. And let's say you hold on and it gaps up, and then by December 16th, it's at 704. Woo! Yeah, my 2 grand, my option should be making money. Nope, you've made $285 and you've taken a lot of risk. It's good. You're still in a positive, but You've taken a lot of risks on this stock, and also it requires thick skin if this option dips up and down, up and down, up and down, and all you see is negative numbers, and then somehow on the 16th it jumps up to 704, and you're finally profitable. That takes thick skin. But for the most part, most likely you will lose your whole investment on options. Um, Especially if, let's say, it gets up and it gets stuck at 680, and you wait, and see, the longer you wait. So let's say right here, December 14th, you're negative 72 bucks. You said, I'm gonna wait for it to go up, and then boom, it pops up by $4. Oh, you're negative $252. And it goes down. Oh, now you're negative $800, and you're waiting. You're playing a waiting game, and so in the meantime, the psychology of this is damaging to traders. And this is money. I mean, this is 2 grand you could have had on something else. So I'm not going to dwell on that too much. So hopefully you get the overall picture of what I'm trying to say here. Now compare this to a debit spread. So you see this, see all this red with time? That's the theta burning you. A debit spread. It says credit, I don't know why, but this is a debit. So I did on this example on the same Tesla. If you purchase a 650 strike price contract with right now with the current price being at 642, if you purchase a strike price of 650, and that's going to cost you $3,750 for one contract, but you're buying on a spread, you're buying a contract and you're selling one, so you're selling that $700 call for $2,000. So only costing you out of pocket $1,740. It's called a debit spread. So it's only costing you $1,700, right? And this can be applied to other options, other stocks, especially if you're not, and you can back it down to like a 680 strike or a 660 strike, depending on your budget, right? But if you want to play with $1,700, the $1,700 debit, that's the max amount you can risk. The risk is defined, right? That's the max amount that you lose, and your profit is defined, in which your max profit is $3,260. So you're doubling your money, right? And look at this chain. Doesn't this look way better? Less red. Now this is your entry price right here, and as the stock goes up, your theta doesn't burn as bad. I'm gonna go back to the other one. Look at all that red with time, right? Look at this. See, expiring on the 18th. So basically, basically, you're risking $1,700, and with Tesla, if it expires at 670, if it jumps up $20, $30, $30, you're making $500 to $800 here. But you have a long way to run, right? And even up here, let's say on the 13th, and some bad news come out about Tesla, or you're not feeling good about the stock, or it jumped it jumped to 687 on the 12th, but then on the 14th came down to $700, $711. You're like, I'm gonna sell. You're still profitable, and your $1,700 made $700. That's a good return compared to here, where it goes up and it jumps back down. You're negative. You're fighting negativeness, like negativity. I don't know if that's a word, but you're fighting this negative. You're fighting against losing money, right? So that's why debit spreads just make sense. So if you do a debit spread on this, it gaps up, your risk is defined. And if it expires, and one thing I like to do, I like to, and it takes experience, but I like to run my stocks to expiration so I can maximize my money. So I want this thing to stop at 693, but let's go to 7. So if it expires, actually, let's even go higher. Let's go 750. See, your risk is defined. So I will maximize my profits if Tesla hits $700 on or before the 18th and it expires in the money. If it expires in the money, basically your broker will assign you 100 shares of Tesla and take out 100. So it's a wash. And you get the difference, which is the difference between 700 and 650 times 100. So that's 5 grand. And this is net. Well, see, I'm a little, yeah. See, 5 grand, and then minus your initial cost is 3260. So that's why playing Tesla is with debit spreads. Now, if you want to take a little bit more risk, you can do a credit spread, and a credit spread is if you again, this is if you're bullish on Tesla. If you're bearish on Tesla, then or any other stock, then my advice is in the reverse. And so let's say you believe it will never hit $600 in your mind, right? Let's say you think it'll never hit $600, whatever. Think So as doing technical analysis, I would use this support line. So I would say 607 is the worst case scenario. Depending on your time frame, I mean, obviously it can come all the way down here. Depends on your risk, but 607, right? So you want to risk, let's say, so on a credit spread, now debit spread, you buy an option and then you go down the chain and you sell one. On a credit, that's on a debit spread. On a credit spread, you sell first and then go buy one to hedge your loss. So let's say our lowest is 60. So let's say we don't think it's going to hit past 607. So you want to sell the 605 strike price at 725. Oops, I got that wrong. I got that backwards. Hang on. I'm not using this website properly, but I know how to work the numbers. All right, so we're selling the 605, and then we're hedging to protect ourselves. This is like insurance. 605 depends on how much money you want to make. So let's say $100, and so we're going to buy. And so the difference here is, obviously you buy ask and you sell bid, right? Now, with a credit spread, you are paid instantly. No lines, no waiting. So instantly, I get $120 credit to my account. There's the difference between selling this option and buying this one. Because of that, instantly get $120. So your maximum risk, however, is $880. Because if Tesla goes against you, you have to honor you have to honor uh, the strike price of 595. The difference between that and you have to honor the 605. The difference between 605 and the 595. So that's a difference of $10, and so 10 times 100 is $1,000. So this round, yeah. So and then plus minus your credit. So you owe your broker 1,000 minus your credit they gave you, so it'd be $880 if it goes against you. But that's only if you let it ride out. I mean, there's defense you can sell, you can move it. There's so many options you can do. And so look at credit spread. This is a nice thing about a credit spread. If Tesla tanks, right? If Tesla tanks, it goes down to 609, you still get to keep your credit of $120. So you keep your entry costs because everything washes out. So it's nice about credit spread. It goes, you can wash out. Like even here, if you sold, so let's say it goes against you and it goes down to 630, and you're not feeling good, and you just want to sell. Well, there's still value here. Your 605 put that you sold is you have to buy it back. It's going to cost you $31, but the 595 strike price that you purchased, you now sell, and you get a credit of $6. Plus, you keep your plus the 120 you got. So you're netting $95. So minus because they give you 120, so you minus the $25. You see what I'm saying? This is you can't lose, man. I hate to even say that, but if you use this strategy properly. And so I usually use a mix on, especially on Tesla. I'm playing Tesla. I sold a credit spread and a debit spread on Tesla, but using technical analysis from my placement points, right? So that's it. That's how you play Tesla. Credit spreads and debit spreads. And Tesla is, this is something I anticipate. I said this in another video too, that they are now offering additional shares, which dilutes the value of your options. So naturally, it's going to come down a little bit. People will get over it, and then it's going to keep moving. So this is, and again, this video is if you're bullish on Tesla, you have a small account, and you want to trade Tesla. Don't run risk by buying individual options unless you are very good at entry points and exit points day trading. This is Reggie. Again, excuse me if this is a little bit of a ramble. Hope I was able to get across my point, and uh, you have more knowledge now at the end of this video than you did when you started. Any questions, feel free to comment below. And this is my video on how to play Tesla today. Well, it's probably good for a while, but this is how you play Tesla and any other stock that's high volatility, that's just moving around. Pay attention to your theta, man. Don't just blindly buy options. Okay, I'm done. This is Reggie. I'll see you in the next video.